All right, let's start. Let's begin. Hello, traders, and welcome to another Non-Farm Payrolls live webinar brought to you by Orbex.com. This is indeed the World Cup NFP, and it's live, right? So it's going to be recorded. The session will be recorded. So if you're late or you didn't have the chance to catch this one, this awesome match, right? It's going to be basically, let's say, for instance, Orbex All Stars versus the US dollar, the non-farm payrolls, right, event. This data will be released. For those of you who do not know what non-farm payrolls release is, it's a fundamental event. It's a economic indicator which relates to the job sector, the private, let's say, government sector, of basically jobs being added. As we can see, there's let's say, for instance, the forecasts. The analysts are expecting a decrease, let's say, versus the previous, which was 223k. Now the average hourly earnings, this is more important, my personal opinion, let's say, but also the unemployment rate, which is expected to rise. So things are not looking fundamental. Let's say, from the fundamental side, there's some sort of mixed data towards the bearish side expected. Now we will see. We'll go on the charts now. Before we actually start with the analysis and intraday analysis on these charts that I have in front here, we will firstly, what I want to do is I'd like to tell you what this webinar will be all about, what it will contain, right? So firstly, it will contain the NFP live analysis, which will commence very shortly, and I will discuss basically some scenarios based on technical analysis. Now, of course, this webinar will be based mostly on technical analysis, more exactly on Elliott Wave analysis, which is my specialty. And what I will do is I will be combining multiple technical analysis tools such as structures, patterns, channels, Fibonacci lines, divergences, and much more, many others. But before I do that, I'd like to let you know that this webinar has been brought to you for educational purpose only and does not imply an immediate investment advice. Should you choose to follow or to make any trading decisions, you should acknowledge the risks involved, okay? So this is just for educational purpose only. This is not an investment advice. Now that we got that out of the way, we will we will actually begin with the analysis. But before we do that, okay, what I'm going to do, let's say, for instance, besides this NFP event, what we're going to do is we're going to stick around on the release, which will take place in about 25 minutes, right? So we have 25 minutes to do some technical analysis live. And also, in the meantime, by the way, if you guys have any questions, please make sure you write them in the question box. I will do my best to answer your question on the spot. If not, at the end of this webinar, I will be taking questions, will be responding to them, and so on. But at the end of this webinar, also after we do the NFP analysis, we stick around, we witness the data released, and we do some more analysis later on. What I'm going to do is I'm also going to follow up on the recently released quarterly report, based on Elliott Wave analysis, obviously. I'm also going to talk about a bit about the Elliott Wave ebook, which was released to some of you guys, part 1 and part 2. You should have it by now. If not, contact your AM. Part 3 is coming soon. There are in total 5 parts. All right. This Elliott Wave ebook contains the theory and explanation of the structures. The best is yet to come. That's what I can say. Part 3 and 4 are, in my personal opinion, the most important ones. And also, I'm going to discuss a bit, because I'm receiving some questions in regards to, let's say, for instance, private sessions, and how can people get in touch with me directly. That can be arranged. I recently opened the doors for direct communication with Orbex clients, right? So if you are an Orbex client, then make sure you speak with your AM to set up the appointment and basically start sessions, right? Also, we'll at the end of this webinar, I'll be talking a bit about a very important thing in my personal opinion. Let's say in the quarterly report, I was basically talking a bit about this, right? The VIX, the volatility index, and actually I'm explaining a little bit this possible spike, and this is not obviously the best thing, right? Because once the volatility spikes like that, like it did here in early February, right? US indices and all major indices, let's say, go globally, had very big falls, right? Such as, let's say, for instance, the Dow Jones right here, okay, when it fell. So what I'm doing in the quarterly report, I'm actually explaining how that could occur again, right? In other words, this type of move to occur once more if it happens, right? So far, the VIX actually spiked there a little bit, and we had this, right? So I will be talking about the next possible market contraction. We'll be explaining it according to the Elliott Wave cycles on the US indices, on DAX, on others, right? But until then, we'll basically start with the NFP webinar, right? Now, before I do that, just want to make sure that you guys can see my screen so we don't have any issues. Can you please type in a yes in the question box? Great, thank you. All right, let's start. Let's begin. So today we have a very important match, right? It's Orbex All Stars, which is all of you guys present here in this room, right? During this webinar, and the US dollar. So together we're gonna basically do our best to win this match, right, against the US dollar, to predict the NFP, the non-farm employment change. So what is there left to do? Now, first of all, what we're doing right now is we're only preparing, right? So we're going to go through some scenarios, and hopefully we're not going to get a red card, right? That's our goal, not to get this red card. So let's start. Now, the point is that recently I've been a bit, let's say, for instance, right here on the dollar index. By the way, the charts will be on the 2-hour time frame. Okay, just to make it clear. So 2-hour charts mostly will be on the 2-hour charts. We'll at the end we will go on the larger scale, because I have some things to show you guys, some very interesting things that are happening, and I want to explain them to you so that you can possibly somebody's saying can't hear audio. Everybody else can. So John, what you should do is either close it and rejoin, or check your audio system. Okay, seems to me like everybody can hear me. Just to confirm, can you guys hear everything? Can you please type in a yes? Perfect. All right, so John, it's you. Thank you very much. Now let's continue. Now, what we're going to do is we're going to pay attention to the economic calendar, of course, at exactly 3:30 p.m. Eastern European Standard Time. This data will be released. So right there and then, some volatility is expected. And this non-farm payrolls, this event, I do believe that I do believe that a big move could occur, right? As a sustainable move, let's say, for instance, because all charts, all technical charts, are pointing towards something possibly coming, right? Now, if you did download the quarterly report, you guys know my expectations, my opinion. We'll go back on that. Let me just let's see, for instance, where is it? Okay. Can't seem to find it right now, the VIX, but anyway. Okay. Now, you guys know my opinion, especially the ones who were close to me, right? Let's say, for instance, back then on May 28th, I was actually looking at this as a possible end of the A wave, and it did actually occur. By the way, this charts, when I click the play button, they just load the new bars from the time of that specific post. Okay. Now, next on the Federal Reserve rate hike. I was expecting this to actually the dollar index to break out and continue a bearish impulse. However, it did not do that, right? It did break out, but instantly it went back up again. That's obviously gave me possible. I mean, the way I'm looking at this is as a possible false breakout, right, with an ending diagonal right here in a rising wedge. Okay, this is typical for a wave X, okay, or a B wave. But in this scenario, I'm looking at it as W, X, A, B, and possibly 1, 2, 3, 4. Sorry, 1, 2, with an extension in wave 3 of C. Okay, so minute C blue and minutes 1, 2, 3, 4, 5. We'll see if that happens. That's the preferred scenario, of course, because I would expect this entire thing to be a B wave, a complex corrective structure of an intermediate degree, which is this turquoise B. All right, and so far these levels actually played out kind of nicely, right? I mean, I posted these charts over and over again, right? Even here, for instance, at the start when I hit again and I hit the double tops, right? I was actually saying that it could drop a bit, right, from there. And let me just find these. Okay, somewhere around here. Okay, let me see. With this article here on the Orbix blog. By the way, you guys can actually follow me on the Orbix blog if you wish, right? Right here on the dollar index. That was the this is the second setup, sorry, but it was posted at the top there as well. Okay, so basically what I'm saying there is that the possibility of the dollar index to hit the 95.15 once more and basically start dropping there a bit, right? And it did. Obviously, the metals, I was explaining the possibility of a bullish run, possibly starting from 1250 or 1240. As you guys know, XAU and XAG, they are showing possible bullish signs. We'll take a look at them, and what I'm going to analyze is analyze the dollar index, gold, silver, crude oil a little bit because something interesting is happening there. Euro USD, pound, dollar, USD, yen, USD, Swiss, AUD, NZD, DAX, Dow, S&P, and Nasdaq, which is one of my favorites right now. Nasdaq is very, very interesting, and it seems to me like it could be leading the US indices into something. Okay, and I'm going to explain exactly what I have in mind there. But Euro started rising again, rising from there on that 1.16 levels pointed out. You guys can actually see those levels right there, and the yen with this scenario. And I'm explaining some things here. You guys should check out this article because it's quite fresh. The USD yen is still about around there. Okay, so we'll keep an eye on that, but the purpose of this webinar, of course, is to follow up, right? So as per the article, the dollar index did go up like right there, 95.15, then it started dropping, right? Now the point is that the way it started dropping right here seems to me like it's channeling a bit, right? So this move may not even occur. Okay, it can actually start dropping. So technically, this could this could happen, right? So indeed, the dollar could actually take a hit. Now our goal is not to get that red card, right? So let's see. Now, obviously, for a wave 2, the default measurements would be either 50 or 61.8, which were not hit, right? However, if this is an extension, right? I mean, if we would face an extension, the 38.2 would do, right? Which means that this 2 could be here, and we could be already in a free, right? And which, I don't know, we'll see, right? Now the point is, let's take a look at both scenarios. Yeah, what could go wrong and what could go right. Now we have a triangle right here, which cannot be really labeled as a 5-wave sequence, not to mention that this went above this a little bit, but it's enough for this not to be a second wave. Okay, now contrary to the analysis as a, let's say for instance, as an alternate count, okay, I'm sorry, okay, all right, what could happen, right? This is what I want to take a look at, because what if this is the leading diagonal of a larger wave up, right? Well, it's pretty simple. We're just going to use the Fibonacci retracements, and we would, let's say for instance, if this would be a 1 and then this would be a 2, yeah, this would be 1, 2, and then 3 in an extension. But the only condition would be for this not to go below this point. If it does, then that scenario could be invalidated. Okay, for now, the way this is looking, and also according to these volumes, yeah, we don't even have a valid bullish divergence, right, yet. So short term, this is pointing down. Even if this would be, let's say for instance, some sort of channel, right? It would need to break through. Okay, now this, if we were to use that type of scenario, now with the Fibonacci extensions, let's say for instance from A to B, we would determine a C wave. Let's say for instance, maybe we have an ABC, so we have basically a W X A B C in an ending diagonal. Okay, so we would be ready for everything. Now the 100% of this of this swing down, swing up, and then this, so we can have a proper pattern, right, to point us upwards, is there. Still, it would mean it will go lower than that, lower than this point, and it will hit 100%, right, and the 61.8, which is pretty, let's say for instance, could be valid, right? But so far, as I said, short term, this could still have chances to go down. Okay, so let me put this here, and we shall continue with the others. Now, XAU USD gold, right? As I said previously, I mentioned these two levels, 1250, 1240, right? Now, they did bounce, not to mention that those levels are basically 161.8 of this swing down, this correction right here, and this, right? So seems to me like the Fibonacci extensions, Fibonacci lines have been met, right? Not to mention that this channel down to, descending channel has been, broken, right? In other words, it seems like it broke out. And this is hence the reason why that post took place. Now, it also seems like it's possibly making some sort of a bull flag right here, right? Technically speaking. So it could shoot on the upside, yeah? However, the most like, let's say for instance, a bearish scenario would be, let's say this would be a 1, 2, and the 3 would only be here, but still it would need a fourth wave. So A, B, C. Short term, gold is pointing up, right? Next, silver. We don't have enough time. We only have 9 minutes, right? Could be a falling wedge. All right, Georgia, you just need to tell me on which one. On the you're referring to the DXY? I mentioned it. All right, ending diagonal. Yes, yes, yes. All right, cool. Glad you're following. All right. Okay, let me put this back. All right. Just give me 1 second, guys. Okay, XAG, right? Interesting, interesting. XAG, as I mentioned in the quarterly report, could, in my personal opinion, could outshine gold in its performance, not in price, in the performance. Okay, same thing as gold, possible bull flag right there. Okay, short term, bullish, I would say. We will see these levels because it can also be an inverted head and shoulders right here, still pointing up, right? So multiple setups are pointing there. Crude oil. Well, my view on crude oil, let's say for instance, was here, and it did indeed, it delivered that bearish outcome, right? Now next, let's say for instance on the OPEC, sorry, this was on the Fed hike. I was expecting this to drop harder. It only dropped a little, then it started rising. Yeah, enough to put a trade on a break even, right? Anyhow, so it went up again. Now, what I'm doing with these setups is, let's say for instance, on crude oil, yeah, I'm highlighting this possible bearish divergence. So the downside could still occur. Yeah, the downside could still occur right there. So I will explain crude oil a little bit later on the daily chart, right? Euro USD, interesting, right? Very complex structure right here on Euro USD, even more complex on USD Swiss. So the way I'm looking at things, even if this is supposed to be a corrective piece, right? Even if it delivers this, it will still have a complete pattern, leaving an A, a B, still leaving a C on the upside. Possible, okay, for a larger correction. If indeed the euro is supposed to complete a larger degree pattern and could be destined to fall even further, but technically speaking, there's not enough evidence right about now imminent that it would continue that humongous bearish fall. It would need to correct, right? That's only normal. So what I'm seeing on euro is a possible triangle right here, okay, and a possible leading diagonal in a channel. So this could also rise, but the patterns, you see, this is the thing about Elliott Wave analysis. It leaves both doors open, and the best scenario is the one which has more probabilities to it, right? So you need to be good at it, in other words. Yeah, nothing is perfect. Elliott Wave analysis is imperfect by nature, but this is the reason why behind the subjectivity and the fight between Elliott Wave traders. You know, I mean, they say that there is a funny saying like you can put 10 Elliott Wave analysts in a room and none of them will agree on each scenario, right? So it is subjective, right? Now, GBP USD seems to me like it's forming a leading diagonal right there. All that would be needed would be a final C leg for this ABC and maybe continue on the upside, right? We'll see if that occurs. USD yen is quite interesting because it broke out when it created this pattern. Okay, so not to mention that it had an ending diagonal right there in the C wave and it broke out, right? Now what's it doing right now? It seems like a bear flag, so it could continue on the downside. So multiple things are pointing towards there. USD Swiss, it's a very complex, very complicated wave count, by the way, on USD Swiss. Yeah, one of the hardest one to decipher, I would say. So the way I'm looking at this is intraday wise is in a triangle, right? So it could do this and then start, right? We'll see if that happens. Now, an invalidation of this would be obviously in a triangle above the A, right? So if it goes above there, the triangle would be invalidated. Aussie dollar, very nice, right? this obviously all these things were posted, so you guys who are following me, you did get notified, of course, right, on each and every one, even on EURUSD, on gold, on everything, right? So we shall see if this is indeed, because it looks like a 5-wave sequence right here, and then corrected enough, 50%, and then gave this buy let's say possibility. We'll see if this happens. Okay, I don't know. NZD kind of looks like an extension. Okay, so it could deliver a contraction for more upside. GRX, I know I'm going quickly through them, and I will most likely spend more time, and will take your questions in regards to the wave counts that you see. So, but we have only 2 more minutes, right? So the point is that what we did so far is we tried our we discussed, in the locker rooms, and we're preparing for the match. Now it's time for us to obviously pass the ball and try to do our best to score, right? So we need to score today. Now the point is that we're gonna wait for these for this data to be released, and we're going to witness the moves. Okay, it was released, it's bullish. Okay, let's say for instance more jobs are expected. However, check this out, 4%, right, 2% more a rise on the unemployment rate. Now, even though this is more jobs were added than expected, right, it's a surprise right here, 55k more, but this is not good, right? The unemployment rate, not to mention the average hourly earnings. So if it was let's say for instance up to me, I mean the way I would look at things, even though more jobs were added, this actually would weigh on the US dollar. So let's check the dollar, right? 2-hour chart. Short term, as we expected, starts to fall, right? But the best is yet to come, because this is pointing me on something on the Dow Jones, on S&P, and on Nasdaq, right? As I said, Nasdaq is one of my favorites right now, along with DAX, right? So let's see here on the dollar. It did, as we can see, I mean, this is a 2-hour chart, so this move can actually be important, right? Now, let me just, okay. Let me check something, because I need to check something, guys. Okay, and I'm gonna show you basically what I mean. All right. So this is indeed, this actually looks like it's dropping. So technically speaking, moving this right here was a good choice, right? So there is a way, of course, to notice these things, and obviously it all evolves around the Fibonacci's, right? As it is part of this type of analysis, they work hand in hand and with the fractal nature. All this is obviously explained in the Elliott Wave ebook. That's why I said that the next parts will be very, very interesting. Okay, so let me just check some things out. Okay, I need to do some adjustments. Okay, I'm just gonna leave them be. All right. Okay, now seems to me like the dollar is taking a hit right here, right? So let's see if it breaks this 100%. The way it looks, it could, right? This move, if it is a bearish leg, this would reflect the free of freeze, which is quite bearish, which means that these volumes could be even bigger than these ones, right? So it could actually do this, right? And then cause a divergence right here, bullish one, and then return, possibly return. Okay. Now, short-term wise, this is indeed a bit bearish, if you would ask me. So, first round has been won by us. So, congrats to those who made the right, a good choice today. Okay, for instance, let's take a look at the others, right? Because gold hasn't reacted yet, so it's quite interesting. I think, usually the moves on the NFP, they don't really happen right there and then, right? Most likely the real moves would actually start a bit later on, because market participants, traders, they um, they get in, let's say, for instance, a bit later on as the data is actually digested. Okay, so let me see. I'm taking a look at all these things, and I think gold would be awaiting for this, for the USD yen to possibly break through, right? Make consolidation and then actually start. So I think gold and silver could be waiting for that. Let's take a look at silver, by the way, right? One good sign right here. Broke through a little bit, returned. Maybe it's gathering more forces to gain support on this, possibly gain support on this 100%, which is the 16 level, right? Crude oil possibly continuing the fall. So we shall see. Now, what would be expected, right? What would be expected for the dollar right now? Well, if I would be correct in this wave count, this would reflect W, X, and then AB with a C wave in the Y, right? With an ABC, right? For the Y, thus completing a bigger pattern, a larger degree structure, yeah, like this. So if this would go here, then this would obviously end a B wave, which means that after B comes C, which could also mean that US dollar could move higher again, right? Just like it did on this monstrous rise from back then, which was posted, obviously. Okay. Now it is dropping, and there's not much to say from my perspective. Everything went according to plan today. All right. By the way, if you guys have any questions, let me just open the question dialog right there. Put them in there. Okay, you're welcome. Okay, so if you have questions, feel free. I know that you guys are busy right now. You're looking at the charts, you're looking at the things, but I'm glad that I was at help for you today. This is basically my goal right here. So I like what I'm seeing. I like this candle on the dollar, right? I think that we could witness some moves. If not, most likely they would occur later on. But euro did indeed react, right? Unlike Johannes. Do you think we can hold gold buy? As I said, this is not an investment advice. Everybody is grown up here, they can make their own trading decisions. My goal right here is just to possibly guide you in a better direction, or just to share my personal opinion, not to tell you what to do, or what to what to buy, what to sell, or what these things, right? This is not this is a regulated environment. I'm not really supposed to do that, so I would appreciate if you would understand me, right? But according to the setups, right, I pretty much said what I needed to say, okay, in the beginning. So that this move on the upside could only could possibly confirm a possible breakout, and then let's say a small correction right here for a bigger picture. So we'll see. Yeah. Now on the bigger scale, Do you have live sessions only for NFP or more? Good question, Percival. For now, yes, only on the NFP. However, there will be some advanced session. I was gonna hold this thing for later on, possibly at the end, but I will explain it. Okay, now there's some content coming your way, guys, and we're doing our best here at Warbex to provide you with valuable content, as we this is what we actually believe in, right? We're gonna give you exactly what you need. If you need to get educated, then the Elliott Wave ebook would mostly will certainly be at help for you. Okay, now the quarterly report was released, and that's basically, I'm going to follow up next on that, right? There is a video course coming very soon, so hold on to your seats. It's gonna be coming your way. Also some webinars, yeah, now some sessions. Now there will be this, obviously every month there will be the NFP webinar will take place no matter what, okay, as a live webinar. There will be some educational sessions, okay, but there will also be some advanced sessions. We'll have to tell you that's only for live account holders. Okay, there are benefits with having a live account with Orbex. Okay, so to answer your question simply, in a simple way, Percival, yes, there will be. Okay, not now, but there will be, and they will make a huge difference, because that's where I believe that traders will join forces. Okay, so yeah, it's going to be interesting. Yeah, not to mention that I'm actually taking a look at something, and I know I told you guys about this before, whoever was paying close attention. Now this is a Dow Jones historical chart from 1914, right? And at the top right there, something is ending, which, as per the Elliott Wave cycles, could turn out to be, I'm just saying, okay, this is my personal opinion, could turn out to be one more like 1930s all over again, right? 2008 is basically 2008 recession lows, 2009, sorry, lows is what's targeted, right, for this possible swing should a market contraction occur. Now, during those advanced webinars, this is what would be in focus, right? So yeah, as I said, there's something big coming, and I'm not watching the VIX all for nothing, right? So let me just I'm looking forward to having you in the sessions to present there, Percival. Okay, it's the end of the dollar. Well, Georgia, I know you're following me for quite some time, so yes, you know my opinion about the US dollar. It's not the end of it, I believe. Okay, however, short term wise, medium term wise, a C wave would be nice to see, so that a bigger pattern would complete. Okay. So moving on, while this setups, let's say for instance, but let me just take a look at them gradually, and then we'll move on to the daily charts. On the quarterly report, we'll make an update on that. Okay. Okay. You meant the 1914 chart on Dow Jones. Okay, I get you now. All right. Okay. It will be a huge crash. Well, I'm glad you see that because most people don't, and the spikes in VIX are nothing to joke with. We all noticed what happened to it. By the way, let me just go on VIX. Okay, but before I do that, let's make a quick summary on these moves. Maybe something some swings, actually some swings occurred. Now the dollar index on the 2-hour chart looks quite bearish right here. Of course, it could be one of those moves to get, let's say for instance, a retracement before a bigger contraction. So in other words, if for those who are conservative, obviously this would be some a scenario for further downside. However, if this would turn out to spike and then do some sort of bull flag, then of course that downside would not be valid anymore, right? So it's up to you, of course, how you look at things, but from my personal perspective, we would be looking together, of course, at this type of scenario, right? So if we were to, let's say, for instance, let me just put this thing, okay, correctly, okay, with the Fibonacci extensions, I'm measuring A with B to determine the end of the possible end of C, and we can notice that 100% has been breached. Okay, usually this would resemble a 1-2 extension in free for the targeting the 161.8, which are these levels. Federal Reserve all over again, right? Actually, not the Federal Reserve, but President Trump's tweets and everything he does. Okay, but it's good because once with this, Republican red ties, then volatility returns, right? Can one download this video? It's not up yet, but you will have it for sure if you stick around. Of course, it's going to be a full course on Elliott Wave analysis, including the theory, right? Explanation, all structures, I believe like 20 plus structures explained, and how they appear, where they appear, how they measured, everything you need to know. Plus examples on charts and this and that, or scenarios, etc. Also some possible projections, right? You know me, guys, I like to leave you something, always like to leave you with something. So where was I? 100% was actually breached. Now this is interesting because the 100% is right there. So we broke through. Now it could bump its head a bit and then continue, right? Your guys are traders, you know what to look for. XAU pretty much looks like it's waiting for something, right? So should, let's say for instance, this is what could happen, right? You just need to take a look at these tops, and it will practically waiting for a big correction. 1,240. I'm not sure. Really, I mean, honestly, this could not resemble, in my personal opinion, the entire corrective. So if this is indeed a fourth wave of a 1, 2, 3 in a channel and then 4, I don't know. The only way it would do that if this is a triangle and it's just tricking everybody, right? I mean, in this type of scenario, A, B, C, D, E with a triangle. But honestly, this is firstly very rare, and this could also be an A, B, even if it's a triangle. So A, B, and then C. So another move could still occur on the upside. So not looking at 1,240 right now. Nothing is nailed in the wall. Of course, it could happen, but if it does, then I don't know. It's just it's even better, I believe, right? By the way, I'm gonna go on the quarterly report very soon on the daily charts, and I will do a full analysis on gold. Yeah, so including the weekly chart, daily chart, etc. So yeah, I have some things to share with you guys. So yeah, silver looks like it could want to attack this channel before a rise. So moves, these moves could take a while, guys. Okay, it's doesn't look like Yeah, that doesn't look like it's going to happen like during this these session. Crude oil, nothing to say about this. Doing kind of what's expected of it, right? With the first wave, second wave, right? And then 1, 2. This could be a free, okay, like this. Let me just label it for you guys. 1, 2, 1, 2, 1, 2, 3, 4, 5. Okay, 3, 4, 5. Okay, so if that occurs, okay, so 1, 2, and then the extension in these smaller waves, which are the subminuets. Okay, just gonna leave it like that for now. Let's move on to euro, which kind of, let's say for instance, kind of paves the way, right? Because if I would be doing a normal type of analysis, right? This is channeling, okay, and this is a bullish sign, I would say. Now, breaking this channel would be quite hard right now because it, as I said, it is channeling, right? So this could resemble an extension in a third wave, which means that we could be counting this entire piece as 1, 2, and then this 1, sorry, okay, 1, 2, and the extension, the free of freeze, right, to create an even bigger channel right there. Okay, and then of course a contraction, a continuation. Now, don't want to jump the gun here, but you know, patience is a virtue, and this is the thing about Elliott Wave analysis, because it is a leading analysis. It's not some sort of lagging indicator such as RSI, CCI, and all this, right? It's a leading analysis. The method, I mean, it's a leading type of analysis. And with Elliott Wave analysis, now it's very subjective, as I said. So first of all, it's not for everybody, right? It needs to be understood correctly to be used. It needs to be used correctly. You need to understand it, because if you don't understand it, if you don't know the secrets of it, you're gonna, I don't know, shoot yourself in the foot. Happen to everybody, including myself. Okay, preparation is everything. Now, the point is that Elliott Wave scenarios, what you do basically, what an Elliott Wave trader or analyst does using this method is you basically assemble some pictures, right, for the bigger puzzle, right? So you gather as much info when it comes to the structures, when it comes to how they develop, when it comes to, let's say for instance, overlaps. Yeah, how do I know this is not a one? Okay, and then two, because this thing is too, well, anyway, it's allowed as a second wave to be sharp, but I don't know. You need to know a lot of things when it comes to Elliott wave analysis. So basically, what you do is you gather as much info as possible, and this, when you have more, let's say, signs going your way, going according to your analysis, you gain confidence. This is the difference between lagging analysis and leading analysis, especially this Elliott wave analysis. Of course, there are harmonics, not to say that I'm not using them. Of course, I'm using AB equals CD with Fibonacci's. I'm using a lot of things, but mostly leading analysis. So, as I was saying, Elliott wave allows a trader, in my personal opinion, to be one step ahead of the crowd, to spot the change, be there when it happens, know it, be ready for it, right? And catch the turn, because when the market turns, just like, let's say for instance, let me give you an example right here, okay, on this one. Okay, I think this one. Anyhow, doesn't matter. The point is, noticing this, right? Posted an idea right here at 1.155. So, you see? Now, of course, how did I know this? Well, let me just explain to you, okay? This pattern, oops, okay, this pattern finalized because I had A, B, C. You have a free move, free swings here. Okay, this can either be a, let's say, fourth wave, for instance. I mean, this to be corrective, and you go in an impulse, right? The problem was it didn't go in an impulse. It went still correcting, yeah. And this is a very complex structure, by the way. It's a triple free, this WXYXZ. But knowing this, yeah, they did not go in an impulse. This kind of points out the fact that you have 1, 2, you still need one more higher than this, right? It could be a running flat, but anyhow, those are very rare because this move went below the lowest point just a bit, right? We need to know these things. So this put me, after this move occurred and this move occurred, right? Well, I had 1, 2, I needed one more, right? And this one more could make a difference because it can be the C wave that you're looking for. So the way I'm looking at things right now, A and B, C, D, E. Of course, this wasn't here, so I didn't know this. That's why you need to update your wave counts. Okay. By the way, if you have more questions, send them. Sorry, so put them in the chat box there. Would be more than glad to answer. Okay, especially about the markets and what you guys think. If you're looking at something and you want me to share, okay, my thoughts, feel free. Okay, so yeah, now the thing is that wave counts need to be updated, yeah, and usually Elliott Wave traders and analysts, they have a main count and an alternate count, okay, acting as that backup plan. So I updated the charts right here, and I'm looking at the triangle. Simple, right? In simple terms. So this triangle would represent this B. Now it started moving upwards and I left it alone for a while and I saw these swings and pretty much looks like a possible extension in this C wave. We'll see if this occurs, right? Bullish signs on the pound as well because this kind of looks like a leading diagonal, right? Complex structure, by the way. Even here it shows a possible leading diagonal, but this move went lower than this, so it could turn out to be an expanded flat in a scenario like A, B, and then C, like this. Okay, expanded flat. Not to say it's not supposed to go lower, right? Pound dollar actually broke out on a daily chart and significant, I mean, an important support. I mean, even the channel, the support broke out, right? So it's not really bullish in my personal opinion. Not to mention that talks of Brexit are still on the table and a hard Brexit could actually occur. Now, moving on, dollar yen. Looks bearish, right? This bear flag kind of looks like it's doing its thing, and all it needs is to break through. Okay, so let's just put this like this, and we'll be waiting. For those who are conservative, of course, you would need this type of scenario, and then again one more correction, small correction on the hourly chart or something. This is the 4-hour chart on the dollar yen. Moving on to our chart on the USD Swiss. Well, kind of broke out, right? So what do we do now? I just left this like this for the benefit of the doubt. Previously I had it here, and this can actually confirm, right? You see where I had it? Oh, nice, right? Okay, now as I said, I am opening I mean, the doors have been open for private sessions. So if you are an active trader and you wish to share some thoughts and you wish me to share some thoughts, then of course speak with your AM. Obviously make sure that you have a live account with orbex.com, and we can arrange working together or starting, or anyway, I'm here for my traders. Obviously, I'm always trying to help out. Let's move on to indices, because AUD looks like it's possibly starting something. NZD, I don't know about this, kind of moved a bit parabolic without the correction, and the way this correction would look, if it would have some declining correction, and only here, let's say for instance below this point at 61.8, which is, let's say for instance, okay, you guys can see the level, right? 0.6780. That, in my personal opinion, would be in focus, just like these levels were here, right there. I mean, when this thing was happening. So let's move on to the DAX, right? Because this was explained in the quarter report, and this actually happened right there. Okay, I said in the quarter report we could have one more rise from there, somewhere around here. I don't know where it was, but on daily chart we will be able to see it. So the way I'm looking at DAX is, I'm having I don't know if this is the end, I mean the pattern, or it could do this and then one more for a bigger correction, A, B, C, but this of course would make this a B wave because of the time wise. Okay, due to the cycles, it would take it way too long to develop for this to be only a mere fourth wave, right? So if this cannot really be 1, 2, 3, 4, 5, right? In that scenario, the way I'm labeling it right now is in an impulse, in the C wave, for me to possibly confirm this Y. Okay, and this can be seen on the daily chart in my previous level ideas. This was indeed spotted back in the day, May 17th, right here, when I said that DAX could actually start something around those levels, right? 13,150, 13,250. So it's 13,200 as a pivot was actually hit. Now we'll see if DAX would deliver that bearish leg, right? This one. If that happens, then more details, of course, will be. I will expand on this on the daily chart because something big is happening. Now, Dow Jones, right? Pretty tricky because this can still occur, and I'm going to explain to you why. When the VIX spiked, yeah, in early February, the drop happened. Yeah, Dow Jones lost a lot of ground. Now, in the meantime, everything that happened in the meantime is a corrective piece for this, right? And again, this is my personal opinion. As I said, everything that I'm saying is to be treated as simple market commentary and not as an investment advice. So this has been labeled as an intermediate A red. Now, in the meantime, I'm labeling this as a W, X, and then, of course, something that would finalize a B wave. Now, where I want to go to is, this is the lowest point of these 3 points, right? So it went up one time, corrected, yeah, and it starts going up again. Now, obviously, for me to finalize an entire pattern as 1, 2, 3, A, B, C, I would need to hit 100%. This is because this move has not gone below this move. So in a simple type of correction, the 100% Fibonacci extensions from W and X would need to be hit for this B to finalize. So I don't have that yet. So what's happening? Can this go and break out directly, right? Is there a pattern that would allow that? Yes and no. More no. Okay, I would be more comfortable with this and then. And I will expand on this. I will explain why. Because the only way the Dow Jones could fall directly and break this channel, by the way, if this is broken, I will lose my faith in this until 22,000, personally speaking. But it would be better if the 100% will be hit, right? Anything above this high point would do, even by a tick, yeah, or to touch it, etc. So anything above or around 25,850. So again, 25,850. Bearish view, I would say, possibly around until or at 22,000. Yeah. So let me just continue here, okay? Now, the only way this could actually start falling, it would be if this would be a triangle, A, B, C, D, E, yeah? But doesn't fit as a triangle because of this. In a triangle, this move would have gone like this. And here, it would drop some more. So it's not, I wouldn't be labeling it as a triangle just yet. What's happening is a complex corrective structure. So this piece is correcting this piece. This piece is correcting this piece. Okay, so this is in conflict with this. It's a conflict of corrections, hence the reason for the WXY. I know that recently someone actually said that well, you can't label multiples within multiples. Who said that? Of course you can, especially in a corrective market, right? If you're in a cycle wave, a corrective cycle wave, right? Of course you can, because there's a conflict of degrees, there's a conflict of corrections between one another, because one correction is correcting a previous correction. So the next correction, of course, will most likely deliver a double free or triple free, etc. Okay, so in this B, this would be just the first leg. Whatever happens in the middle is just correcting that. Okay, so we'll wait for this to finalize. Yeah. Now, if this is the first move of that, this would be the correction. Yeah. So you have 1, 2, A, B, C. All right. So we will see. Now, in simple terms, if the Dow Jones manages to push right here on the upside, the level in focus would be this 100%. However, if it drops and breaks out of this channel, this would be a very bearish sign in my personal opinion. Moving on, SPX, same scenario, right? Same thing, lower low, never hit something lower since then, right? So as you can see, this is moving in a corrective pattern. Okay, so let me see. Okay, still some people in. Thanks a lot for sticking around. Okay, there's more to come. Okay, I'm gonna make this. I'm gonna try my best to make this quicker, or even start some. Start those regular sessions based only on pure technical analysis. I know you guys would like that. By the way, I like to answer. I like to ask a question here. Would it be okay with you for us to, for me to host this type of sessions on a regular basis, such as, let's say, every 2 weeks, besides the NFP, of course? Pure technical is best. Well, of course. Okay. All right. You asked for it. We'll do it. All right. Let's continue. The S&P, right? It is rising in this type of channel. However, pretty much this looks corrective, right? And this is the same thing that gold shown before it broke up. I'm gonna go on the daily chart very, very soon. And I'm gonna finish up with this webinar because we've been here for quite some time, okay? But the point is that how I'm seeing, short and simple, is for this B wave to finalize, possibly a push up and 100% to go higher than this point. Again, if you wish to discuss about these things in private, schedule yourself a private session, so contact me directly. 2825 would be my level in focus for the S&P, all right, all the way down towards 2475. That would be the bearish scenario, okay, because this is when I would see the VIX continuing that spike. So we'll see. That's my personal opinion. However, if it breaks out right now, okay, I mean soon, a scenario, of course, for the conservative analyst would be this type of corrective piece right here, okay, bumping its head in this previous, because this support is strong, the 2700. If it's broken and then a corrective piece would occur, then this would only signal a possible bigger fall. So you guys have two scenarios. Either breaks out, makes this, and then goes down, or gains support again and forms a 5-wave sequence. By the way, this needs to be either an ending diagonal as a motive wave to finalize the C. Yeah, and the level in focus would be, of course, the 100%. Nasdaq. Nasdaq on the 4-hour chart. So S&P was on the 4-hour chart, Dow Jones was on the 4-hour chart. Nasdaq, pretty interesting, this Nasdaq, right? Created an all-time high here. Created an all-time high here. 21st of June. 21st of June, S&P created a lower high. Dow Jones, even more vulnerable, lower high. This means that the Nasdaq and this move on the upside is not really being justified, right? In a sense that there's a divergence between them. They're not creating all-time highs together, not like before. Okay, so how am I labeling this? Well, it's different. It's labeled different because I'm seeing this as a WXY for a larger W in a running flat. This entire thing running flat. Okay, and then this to be an X wave, and this is actually looking much better than all of them, to be honest with you, because I was present on the upside right there, 7320. Yeah, you guys know that. And this is a corrective piece. Corrective, it is gaining support on this, but in my personal opinion, I believe it's awaiting. These fibs are awaiting to be touched, right? So this can actually, to be honest with you, it can actually start dropping, right, anytime it wants, because this is indeed a corrective structure. It's not impulsive, right? However, if it would give an impulse wave, it would be even better, because that would be having, let's say, for instance, more probability to it. Yeah, I would be happier to see some higher grounds, because on the lower time frames, only then it could. Anyhow, the scenario would be, let's say, for instance, if this would start rising, yeah, a level in focus would be either 7320, not sure it's gonna go there, but 7,200 should be in focus. Now, if this drops, yeah, same scenario, another corrective piece, yeah, not even sure if it's gonna be a piece like that. Okay, it can be a very small one, yeah, but anyhow, that's the point. So why am I actually talking about all these things, right? By the way, the dollar seems to be dying. Okay, gold doesn't look like it is being sustained, but for gold, some buyers might be joining forces right now, just waiting, and we'll see. Crude oil is indeed bearish, let's say. Euro still bullish, pound dollar still bullish. USD yen, yeah, as I said, gold could be waiting for the yen to get that safe haven effect, right? And possibly get that slingshot effect. Now USD Swiss. Oh, look at this. My God. Yeah. When the Swiss moves, it moves. Same thing for the Aussie. Yeah. Well, seems to me like everything is going according to plan, right? So far. The dot-com bubble all over again. Yep. Glad you see that as well. Speaking of the dot-com bubble. Okay. Now this is exactly when it will go, when it will become very, very interesting. Let me share with you guys something. Now, this is the VIX, the volatility index. I'm sorry, guys. I just needed to clear my throat. I've been speaking for quite some time, so anyhow. Now, this is the dot-com sentiment. And when the VIX spiked, this is the dot-com bubble. Yeah. From then until 2006, dropped to record lows. So what happened here is this was the greed period. People were buying stocks, they were optimistic, they were complacent, keep on buying because the stock market is going up, right? Guess what? Fear kicks in, right? The VIX spikes, volatility returns, and then market is falling. People start becoming afraid, right? What's happening? What are we doing? Basically, they sell everything out of fear. Okay. So since 2008 until now, we had some spikes, and this can actually be seen on the actual charts, right? Now, what's happening now is another spike occurred in early February, which resembles, of course, in my personal opinion, the first leg of a bigger structure for the downside, right? Now, with a quarterly report, I mentioned this possibly starting, and of course, we need a correction before that, right? So, this is a weekly chart on VIX, by the way. So, should we have this type of correction, then this could start occurring. Now, if it does happen, then DAX, right? Yeah, double top, head and shoulders. Not the best one, right? Not to mention if it breaks through this, I can't imagine what will happen. Anyway, we shall see. Now, going on the quarterly report right here. Okay, I just watching the questions. Okay, let's make a summary on this, right? So on the VIX, this was right here, and it didn't spike yet, right? So as we said before, I mean, as we seen the chart on the VIX, it did actually spike since then, right? With this, obviously, with this look. So loading the new bars since the time of close, it actually spiked. Okay, now this is indeed a weekly chart, so can't really see much, right? Now the dollar. I'm sorry, guys. I need to clear my throat. Now, dollar. I was in the quarter report. Let's say moving on to the dollar. I was actually saying that from there, from 93.46, we could, let's say, look at resistance 94.30, 95.30, right? And it did gain resistance 95.30. Yeah, and started falling. Now, the way I'm seeing this is an ABC, right, to complete this B. So I'm labeling this as an ABC for the first A, yeah, then this B, and then possible upside some more. The reason why I'm saying this is because I'm starting to lose my faith in gold, the way it has broken through multiple things. Moving on to the euro on the daily chart, that was the dollar index on the daily chart as well. So on the euro, it did bounce, right? Corrective piece. I would expect this, as you can see. So I was obviously Yeah. During the quarter report, I was saying that it could drop some more, and let's say, for instance, support possibly at 1.150. Yeah, so going around there, 1.150 is right here, and you can actually see that it started rising. Okay, we shall see how long this move can go, but there's another pattern right here. Okay, should that occur, obviously more details in the coming sessions on this. Try to keep this webinar, I mean, we will end this webinar very soon because it's taken a long time. USD yen, same thing right here. I was expecting a possible drop right there for from 111, and it seems to me like it's just possibly starting right there. Okay, so the scenario would be an A, B, and then a C. We'll see if that happens. XAU, XAG in the quarterly report right there, I'm speaking about silver possibly outshining. Also, yeah, USD yen 1110, the resistance. So XAU, XAG here, I was saying that it could possibly go up some more, and then we'll see. But this is indeed the monthly chart for that. So if I load the new bars, we can see that it's already, I mean, gained support from that. So it could turn out to be true. Okay. Next, gold, yeah, gold silver ratio. This is basically the resistance, etc. Now, gold, right? I was I was actually optimistic on gold. Let's say, for instance, I thought that it would gain support this on this channel. However, it broke it. I was prepared for this scenario. Don't worry about it. Okay, as I said, I mentioned this possible fall, all right, and what would, or could, you know, what could happen at those specific levels. You guys should, I mean, this is the analysis. Anyhow, the point is that this gives me even more details, right? And I have two counts on gold, right? One would be just the way it was, yeah. However, let's say, for instance, you know, this correction to be NABC, yeah. But the decisive piece would be if it gains support right now on this trend line or not. Because if it doesn't, and if it if it manages to break out, then the structure would be completely different. Yeah. I hope you get the picture. So if it manages to gain support and rises here, obviously this would be the next resistance. Yeah, 1325. Hence the reason why I posted those levels at 1250 and 1240. Now the other scenario is kind of looks like this, right? An AB, sorry, an A, yeah, and this to be the B, right? W, X, W, X, Y for this B. So you have W, X, Y, W, X, Y, A, B, and only then to complete the pattern. Yeah. The reason why I'm saying this is because anyhow I'm going to load the weekly chart on gold later on. XAG, kind of the same thing, nothing much to let's say, for instance, I put some supports here. 1650, it did drop, okay, 1635 and 1585, which actually held, right? So they did drop. So the metals seem to be awaiting for something, right? Even crude oil, I thought it was gonna break out, and any trader would have thought that way because it kind of broke out, right? So it did drop and then immediately returned. This only complicates the structure, right? So that's the reason why I still believe that. So S&P 500 didn't provide that rise anymore, right? So instead, it went directly for the lows, right? So this would be Let's say, for instance, this view right here. Yeah, so I had 5 waves on the upside, just wanted one more squeeze, right? Instead I did an ending diagonal, it just started contracting, right? So this only complicates the structure some more. That's it. Let me just go back to it. Okay, and the start of the day, DAX, which is, in my personal opinion, in this in the DAX, let's see, what is it? Okay, resistance 13,000. Yeah, and well, what I'm saying here is that 13,000 could possibly be the end of this B wave and then the C wave to commence, and just by somewhere, yeah, right here. Okay, right here, I said that it could possibly start falling. This is the daily chart, and it did. All right, so we'll see if this ultimate swing occurs, and we'll see what it will do here, because if this happens, it could gain support, and this could be the end of wave 4, cycle wave 4, green. Okay, if it manages to gain support, then this would be the end of the super cycle, because we have 1, 2 extension, 1, 2, 3, 4, 5. So we have 3 complex corrective structure, 4, and then 5. So we have a complete 1, 2, 3, 4, 5. After 1, 2, 3, 4, 5 comes ABC, and this ABC could tag minimum this low, yeah, which is basically almost a 50% drop. What could be best? What could cause that? Then a big spike in VIX and a market crash or flash crash or something. Yeah. So that's basically what I wanted to do. If you want to expand these things in private, then that can be done. Okay. So yeah, pretty much. Let's just jump back on the intraday charts and see the dollar what's doing. Pretty much it's still there. Gold hasn't started anything, basically stuck there. Silver the same. Crude oil, I think the market is still waiting. Euro is not waiting for anything, to be honest, right? Let's just see. Okay, only have Canadian data released, and yep, this could hurt crude oil. We'll see, because the pattern is still pointing on the downside. Yeah, so USD yen is still there. Now it's obviously we're not gonna stay here to witness all these moves, but I believe that we spent more than enough time, and I do believe that I was at help today. Yeah. Now, one more thing that I would like to ask you is if you would be so nice. Thank you very much. Thank you very much, guys. By the way, if you have more questions, I will take them now. If not, then we will end this webinar very soon. Yeah. So if you have questions, just put them in the question box, please. Now, one more. As a last favor, okay. Myself and orbex.com would very much appreciate if you would just leave your feedback right here, okay, on the Orbex blog. Yeah, on this, you can actually find it on the Orbex blog, on the NFP webinar. Let's say, for instance, you can find it in the webinars. Yeah, okay, right there. So you can find it there, and if you can leave your feedback right there, how you found this webinar, if it was useful to you, what we can improve, or how was it, right? Just leave your feedback right there. And the dollar index could, yeah, okay, it's going okay for now. So short-term wise, we did the right thing. I'm pretty glad we did a good job together. Thank you, guys. And also, we did not get that red card, right? So we kind of won this match. Yeah, congratulations, everyone. Many pips ahead. That's what I like to say to all my traders. Now, obviously, your feedback is much appreciated, and if you have anything to add, then or to say, or leave your feedback, simply make a review, right, on this webinar, then please just leave a comment right here. I would very much appreciate, Orbex would appreciate that. Okay, well, that's about it. If you have any other questions, guys, put them now, or we will end this webinar. Okay, I'm pretty glad most of you stayed until the end, right? Because at the end, I actually discussed about those things. By the way, some big things could be happening, right? Or coming, right? I just need some more pieces, right, for the puzzle. Now, what I would be satisfied with is to see the Dow, right, rising there. I mean, all the US indices giving some more details, right? For the upside, delivering this upside first, I would be satisfied with that, so that we can meet some fibs. I'm not sure it's gonna do that, but anyhow, we'll actually see. We roll with the punches. We do our best, right? For USD Swiss looks like it's broken out. I think it could be leading. USD yen, pound dollar still rising, euro USD still rising. Yeah. The only ones that are not rising are the metals, right? And the USD yen not falling. So metals could be waiting for USD yen. So keep an eye out for that if you want. You're doing a great work. Well, thank you very much, George. I appreciate it. Okay, if you would kindly leave your feedback there, so to make it like a review. By the way, guys, if you want to make a review, please do it right there, right? In the World Cup NFP live, right? We won. We scored. Congratulations, guys. Congratulations to everybody. I'm glad I was at help. If you believe so, then would very much appreciate your feedback. Now, that was it for today. Thank you very much for your time. Thank you very much for sticking until the end. More is to come, and more content will come your way. We'll do my best, and Orbex will do its best to provide you with more and more useful tools and material, content, etc. Right? So that's it for now. Until next time, as I like to say to all my traders, stay in the green and many pips ahead. Bye for now.